Hey, what is going on everyone? Welcome back to another YouTube video. My name is Jerome and I'm a full-time Forex trader here in Sydney, Australia. In this video, I wanted to cover the topic of backtesting and how important and crucial it is to become a consistently profitable trader day trading the financial markets. Without backtested data and a proven and tested system, you are going to lack the confidence to execute trade setups in the live markets, resulting in poor performance, and you may even potentially lose a lot of money. The last thing you want to do as a trader is blindly enter trades in the market without knowing the expectancy of return on that trading system. In return, this can leave you very frustrated trading. I've seen it a lot of times where people just kind of come into the chart and just all they want to do is trade. As traders, a lot of our work is done outside of actively trading. Backtesting is the most important and most efficient way to test a system and even build a system just to know the parameters, shifting probabilities into your favor, and also to gain confidence in pulling the trigger consistently in the live markets. As traders, we don't know what the market's going to do. So having this data when you backtest your system, going back in historic data on the charts, is the most efficient way to build confidence, execute your trades consistently, and your fastest way to become a consistently profitable trader. Before we get started, I just want to give a quick shout out to all my new subscribers. Thank you guys so much. I really appreciate you guys checking out my content. I hope you guys get value out of everything I put out. Even if I help one person, I'm happy. If you haven't already, please hit the subscribe button and also hit the like button if you like this video. Be sure to hit that bell icon so you get notified for any future content I release as well. So just a quick run through on what a trading system or strategy is. Pretty much it is a pattern that presents multiple times in the market that has, well, it should have a high expectancy over a long period of time. What you're looking for when you are designing or building a strategy is a decent risk to reward profile. I would always recommend a risk to reward profile of 2-to-1. So if you're risking 10 pips, you want to be able to get 20 out of it. The advantage of having a backtested system, having the data in front of you and knowing the expectancy and probability of your trade parameters will give you the confidence you need to trade in the live markets consistently and with a lot of confidence in pulling the trigger and getting involved in these trades that you need to be involved in. So in this video, we're going to jump into the charts and I'm going to take you through the whole process of designing a spreadsheet in Google Sheets, jumping into the charts, going back in historic data using TradingView, and we're going to build a system. I'm going to show you how simple it is to kind of go through the market and find repeatable patterns that present. The trick is trying to find patterns that give you that best risk to reward profile and adding all these parameters to it without overcomplicating it to kind of shift probabilities into our favor so we can execute on high probability trade setups. As you guys know, I'm with ASFX. ASFX does have a tested and proven system that is a game changer for me. It has changed my trading dramatically. Obviously coming into ASFX back in April, I still tested the system because it's the best way to gain confidence in yourself to execute on these trades. Even if you find a strategy online, which there are thousands of strategies to choose from, I believe 99% of those strategies actually work, but no one does the work in the background to backtest it and find out the probabilities, the win rate, and the expectancy of that system. So a lot of the time you are entering blindly in the market, following just a random strategy you found online or on YouTube without knowing the statistics behind that system. So without knowing the statistics and the data of that tested system that you find online, you may take one trade and lose. You may take a second trade and lose. You may take a third trade and lose, and then obviously emotions start to kick in, and then you're like, you know what, I'm not going to even take that fourth trade that sets up. That fourth trade is the winner, and you make back all the losses in the last 3 trades. Because you didn't have the confidence and you didn't have that statistic data to pull the trigger and execute on all the trades, you're going to destroy the expectancy of that trading system because you are now letting emotions get involved. Having backtested data, knowing how the system performs is the number one way you're going to become a very consistent, profitable trader and be able to execute your trade setups with complete confidence. So we're about to get into the charts here. I'm going to show you the whole setup, how we can set up the Google Sheets, how we can go back and find repeatable patterns in the market that give you that best risk to reward profile. And I'm also going to be using EMAs as well. A very simple indicator that we can use as dynamic support and resistance. So it's going to be really cool. So without rambling on too much, let's get into the charts and let's start. All right, welcome back, guys. So we're going to pretty much dive straight into this and get started. So the first thing you want to do is open up your web browser and go to tradingview.com. TradingView is an amazing charting platform. It offers so many cool tools and it's just an all-around great charting package. I recommend TradingView for any new or even experienced traders, and they are slowly getting to a point where you can almost trade through this whole TradingView platform using a handful of brokers, which is very cool. So with TradingView, I'll have a link in the description below, but if you want to use my referral link, go for it. I get $30, so you're helping me, but if you decide to upgrade to a paid version, you get up to $30 as well. So the link is in the description below if you want to use it. If not, the great thing about TradingView is it's completely free to use, which is great for beginner traders that don't want to fork out that expense in the beginning. So before we get, I'm not going to go over TradingView too much, but what I have here is a very basic 50 moving average. Now, I'm going to be testing and building a system using the 50 EMA just to kind of run you guys through patterns, repeatable patterns that happen in the market and how you can kind of develop and build a system. And then we're going to go over to Google Sheets. So what you want to do is just type it into Google Sheets, log in. You may have to log in, I'm not sure, and then open a blank spreadsheet. So it's very similar to Excel, Google Sheets. I like it, it's much more user friendly, and I just it's more simplified than Microsoft Excel. So this is really cool, and I recommend a lot of people use it. I believe it is free to use as well. So before we dive too far into the charts, if you go to indicators and type in moving average, I have an exponential moving average. This is what this red line is. It's a 50 moving average. So what that means is it will gather data from price and the candles from the last 50 bars. And that's what you see here. So the last 50 candles is what's kind of displaying on this red bar. Exponential moving averages, or moving averages in general, are like support and resistance. It's like dynamic support and resistance. So when price returns to these EMAs, you can see the market react to it, and you can kind of, using price action, get really decent trade signals to take advantage of. So just by looking at this chart real quickly, we won't go too far in it. Every time price has come to this EMA, we've kind of, you can see, we've gotten these kind of moves off it. We kind of almost tested it here, So when I talk about developing and building a system or strategy, it's repeatable patterns, shifting parameters and probabilities into our favor, and always looking for that risk profile of 2 to 1. So before we get all into that, let's head over back to Google Sheets and let's start building this out for our back testing. So the first thing you're going to want is the pair you're trading. So for us, I'm going to use GBP USD for an example. All right. And I will put a link to this spreadsheet down below as a template. You guys can modify it and add your own parameters that you want to test, but this will be the very basics as well. For the guys within AceFX, I'll give you a special one as well with the AceFX parameters, so you guys can go out and test and see how the probabilities, shifting those parameters into our favor. You can see how it works out and really adds that higher probability in our trade setups being better quality trades. So let's make it look fancy. All right, and let me just make it all over here. So the first thing you're gonna want is your pair. Then you're gonna want a signal. So what I'm gonna go for is a 3-bar reversal, which is a candle formation that happens very frequently in the market. But if you can find a 3-bar reversal at a significant level, such as an EMA or support and resistance line or a trend line, they are very powerful. So 3-bar reversal, and you guys get to see how bad my grammar is. There may be a fair few spelling errors. So, so you got your pair and your signal. So pretty much what we're going to go from there is Are we long? Is it a long position or a short position? All right. So when you enter the trade, if you're going long, what you'll do is you will obviously type in long. If you're going short, you'll type in short. So the next thing you're going to want is your entry date. So when you entered on the trade, and then you're going to want your entry time. So what time did you get in? After that, you're going to want your entry price. So what price point did you enter on the trade? This data is very important because you want to know, are these setups presenting during your trading hours? Are you going to be able to get to your desk in time? Are you working full time? Is it happening like a ridiculous time in the morning for you, like 1 a.m., 2 a.m., and you may be sleeping? So having this kind of statistics of when these most high probability trade setups present is a massive advantage. So after you have your entry date, entry time, and entry price, you want to put your stop loss. Every trader must be using a stop loss in every single strategy. It is so important to use this. This basically tells you when you are wrong and the trade is going against you. It gets you out before digging a massive hole into your trading account, and that can be catastrophic. So you do not want that. So always use a stop loss if you're building a system or strategy, even if you're just kind of trading in the market, please always use a stop loss. So after your stop loss, the next thing you're going to want is your targets. So I take partial positions in my trading. So when price hits a certain R multiple, I will be locking my stop loss, and I'll be more or less taking a position size off at R multiples just to secure some money as the trade progresses, and kind of just helps my psychology. And that's pretty much how trading fits my personality. I'm not one of kind of just setting and forgetting. So I won't get too caught up in that. So the next thing you want is just your target price. And this will be obviously at 1R. Target price 2, which will be at 2R. And we'll keep it at just 2. We won't go too crazy with it. So after that, you're going to want your exit date, your exit time, and your exit price. So this is the bare bones of a basic backtesting spreadsheet. So now the fun begins, and let's go back in historic data on GBP USD, and let's see if we can find trades that come to the 50 EMA on the 15-minute chart, and let's see if we can find a 3-bar reversal. So with TradingView, don't quote me on this, but I don't know if the replay feature is available for the free version of TradingView. It may be, I'm not sure, but I have the pro plan, so it allows me to go back in historic data and kind of go bar by bar. But if you don't have it, simply go back to the latest date TradingView allows you. So let's see. Let's go January 2020. So on the 15-minute, the last bar I can jump to is the 1st of the 6th, 2020. So what I'll do is I'll use the replay bar, and we'll go here. And we'll start developing and going through the chart and seeing what entry signals we can see present, and we'll start logging them. So I'll hit the play button here, and we'll let the market do its thing. So we are waiting for price to come down to this red line here, which is the 50 EMA. All right. So as you can see, price has come down to that 15-minute 50 EMA. Whoops. And we've had a 3-bar reversal in here. All right. So what you would want to do is get this cool little tool that's in TradingView, which is the risk to reward thingy, and we can set up the trade. So what you would want to do is you would want to enter on this candle close. So this bullish candle close that broke above this left leg. Now with the stop loss, I'm going to go for a 15 pip stop loss. And basically a 15 pip target would be 1 to 1. So you can see it says in this red box over here, 1 to 1. That would mean that price, if price comes up to there, I'd make 1% of whatever I risk if I risk 1% of my total capital. If we move it up here, that's 2 to 1. So that's what we're looking for in any trading profile, would be a 2 to 1. All right. So you have your entry price, which over on the right here is 1.2390. You have your stop loss, which is 1.2375, and you have your target at 2R, which is 1.2420. So what you would do is you'd go back into your spreadsheet. You'd put in the pair, which is GBP USD. You'd have a 3-bar reversal. It's a long position. You'd put in your entry date. So we would have entered on the 1st of the 6th, 2020. So 1/6/2020. Your entry time, which would be at 2045. Whoops. Your entry price, which is at 1.2390. You have your stop loss at 1.2375. And you have your take profit 1. So what we'll do is we'll let this trade play out and then we'll enter the data later. So you can see we would have got stopped out on this candle right here. So we got tagged out. So what you'll do is you'd have your target price would have been over here. So you would have been at target ones would have been 1.2405. 1.2405. And your target 2 would have been up at 1.2420. And then you'd put your exit date, which would obviously be the 1st of the 6th, 2020. And then you'd put your exit time, which we got stopped out at 21. And then your exit price would be your stop loss since price hit your stop. So as you can see here, you've just entered all this kind of data, and you can put the result in here as well. And you can put L for loss. So you took a loss depending on how you manage the trade. If you put 1% risk, you can do that as well. So you would be down now at 9,000. If you had, let's just put this at a reasonable count. So put that 10,000. So you'd be down $100 if you risk 1% on a $10,000 account. So you can put in here as well, -1%. All right, moving on. So now that we have all those results in there, so we have all that data put in, we can move on and see what happens. So what we do have is another 3-bar reversal, which is in here. So we had this bullish move, indecision candle, and then we had this right leg closing above the previous left leg over there. So you would enter on this candle over here. You'd put a stop loss of 15 pips. And then you would basically looking for the exact same thing of your targets at 1R, and 2R. So once again, we would enter on the 1st of the 6th on GBP USD. 3-bar reversal, I'll just copy and paste that. It is a long position still. Same day, we would have entered now at 21.45. Our entry price now would be at 1.2388. 1.2388. Stop loss is now at 1.2373. 0.2373. and your target price 1 is at 1.240. I think that was right, 1.243, sorry. And your target 2 price is 1.2418. 1.2418. Now, backtesting is very tedious, it's very repetitive, and I don't enjoy it. But the feeling you get knowing the confidence and the confidence you build in your system, definitely 110% worth putting in this effort when trying to develop or test a system. So let's see what happens, and let's see how this trade progresses. Once again, this isn't a system I trade. I'm just making this up on the spot. Please don't trade this unless you test it. But let's see candle by candle. Let's see what happens now. So once again, let's see how price reacts to our target 1. Let's see if we can get out targets. So you can see price took out target 1 there. And let's see how this trade progresses. And there it is. So target 2s have been hit. So this would have been a 2-to-1 risk to reward profile. If you risk 15 pips to get 30. What you'd want to see in any backtesting system or any strategy you use is definitely a system that can achieve these type of risk profiles. Anything under 1.5, even if you're aiming for 1-to-1, it's not ideal. So having a 2-to-1 risk to reward, you have to take 2 losses at 1% risk on each to get back to break even. So the more risk to reward profile you can build, the better. So back over to our spreadsheet, we can enter so we have our target 1, target 2. We can put our exit price at target 2. Exit time would be, it pinned it up here. So 1st of the 6th, 2020. Sorry, I did something wrong there. 1st of the 6th, 2020. Exit time is 23:30. And the exit price would be our 2R target. So this would be a win, and we would add 2% to our overall capital. So now you can see that we are up 1% even though we took that loss. We regained it, gaining 2%. So 1% for the day so far. So what you'd want to do now is continue on and see what happens. The price is coming back to that 50 EMA. Let's see if we can get. So this would be a 3-bar reversal. Once again, you would want to test to see what these overextended bars, how they perform. Because if I put a 15 pip stop over here, it will obviously won't be below that consolidation period, just a little bit. But let's see what happens. So let's aim for targets at 15 pips. So that's 1. And let's see what happens. So as you can see here, easily took out our 2R targets. So once again, heading over back to the spreadsheet, GBP USD, 3-bar reversal. It was a long position. We entered on the 2nd of the 6th. We entered, the time we entered was 15:15. Entry price was 1.2494. 1.2494. Our stop loss is down at 1.2479. 1.2479. Our target 1 was at 1.2509. And our target 2 was 1.2524. So 1.2524. So exit date was on the 2nd of the 6th, 2020. And the exit time was 16:30. Now, of course, you can see how repetitive this can get. And I'll go over some really kind of tips and tricks how to build backtesting into your daily routine, because I believe every trader needs to be doing this. It's so crucial. So exit price was 2R. Once again, if you're risking 1% on the trade, you've just bagged another 2%. So including this negative 1% loss here, we are up a total of 3% on the account. So going forward, let's see if we can get another entry. Once again, I do highly recommend testing to see how far. So what I will do, the spreadsheet I'll give you guys will have another column in here saying peak risk to reward. And then basically having that data, knowing the average height or risk to reward you can get out of the setup you are testing, you can kind of average it out over like 50, 100, 500 trades. And you can find out that, hey, instead of taking 2R, maybe I should aim for 3R, because majority of the trades, like 80% of them, go that far. So this is why testing a strategy, knowing how it performs, knowing how these signals react, how far they can go, the potential on them is so crucial in knowing the probabilities and expectations of your trading plan. So let's see what happens as we come back. So here we are, we're back at that 50-minute 50 EMA. Once again, same signal as we had over here. So we had that bearish bar, came over here, and we broke up above with that right leg. 15 pip stop loss. This one looks like it will come underneath. 15 pip take profit for target ones. And let's see what happens. And then you can see it gets stopped out. So you'd enter it in there. So once again, obviously testing multiple stop losses as well. So maybe you want to test a stop underneath the previous support, which would definitely be an ideal scenario. This is why I'm saying please don't trade what I'm showing you. This isn't an ideal risk profile. You want to put your stop in the path of most resistance, and you want to put your targets at the path of least resistance. So obviously price, price can easily come back into this zone over here. So you don't want to put your stop loss there for sure. You want to put it underneath, because you can see multiple times price has tried to break and it couldn't. So it's held this level. So you want to put your stop somewhere under there. That's just common knowledge with trading. You don't want to put it in where it can easily get tapped out. So let's just see what happens with this one. Once again, you get that other signal. This was obviously a loss at 1%. I will put 2 odd targets in there real quick just to kind of fill out and populate that data for you guys. Exit price was obviously stop loss, since we got stopped out and we took that 1% loss. So once again, I'll do one more for you guys. I know this is going to be quite a long video explaining everything, but trust me. So once again, 15 pip stop loss from the entry. This is kind of a better position to put your stop loss, but let's see what happens. Definitely not pain-free, but just a quick example, seeing how you have that stop loss underneath there, it never got touched. So let's see if we can get this to come higher, and there it is. So once you take that loss over here, you'd obviously try and get back involved, but with the back testing, obviously you can see what works better. So as you guys can see, this first trade we took, we got that second entry. We took this third trade as well, and now we've taken this trade. So let's put in the trade we just did, 3-bar reversal, long position. I know this is very boring, nothing exciting, but I hope you guys are getting some value out of this. So target 2 is we're at 1.2576. 1.2576. All right, and obviously the third was 6:20:20. The exit time, so we had targets at 9:30 in the morning, and the exit price was our target, so that would be a win for another 2%. So in all, we've made 2 for 6% and in total wins and 2% in losses. So that is what, 4% total gain, which is pretty good. So as you can see, this is the bare basics of creating a trading, backtesting a system. Obviously, if you're using Fibonacci, put it in there. Like if you're testing, however you test it, you could easily see what zone it comes to. Test it, put in where what Fibonacci level it comes down to. If you're testing previous structure, so let's say looking left, you had this kind of zone in here from this previous high over here. So you can see like it was resistance, broke it, tested it, and now it's using that resistance as support. Test stuff like that, put it in there. I've found it very hard to test support and resistance levels like actual levels in the market, like this white box over here. That's why I love using EMAs, because they are dynamic and they move with price, referencing price points and smoothing it out. So you can see just from making up this strategy on the spot, I haven't even tested this. It is only 5 trades. You would like to get at least a sample size of 100 trades when you're determining the system's expectancy, and you just kind of rinse and repeat this process. What I'll do is I'll definitely put this link in the description below. I'll give you guys the template and you guys can play around with it and do what you want with it. For the guys in the ASFX group, I have a really cool spreadsheet with all the ASFX parameters in there. You guys can go out and test yourself. The very, very straightforward process, doing the exact same thing I showed you guys here. So I hope you guys got some value out of this video. If you want to know more, if you want me to go into more depth about any of the how to backtest and adding more parameters, please let me know and I'm happy to do another video for you guys. I hope you guys got some value out of that video. Let me know in the comments below, or reach out to me on Instagram or send me an email if you want to know more about backtesting. I do plan on doing a better run through video in the future, but I've been getting a lot of messages. I just wanted to get this out there real quickly for people who want to start developing and testing their own strategies or building their own strategy. As you can see, patterns repeat in the markets. What you're trying to do when developing a system, or even if you find a system online or through another educator, you want to make sure it has a decent risk profile, anything 2 to 1. As you can see, we took a few losses in there, but because we are hitting that 2%, we're making 2% per 1% trade risk. Even if you take one loss, you're still going to be in front. And that's what you want in a trading system. That's why I love ASFX so much. The risk reward profiles we can develop on the ASFX entries are amazing. You know, risking 10 pips for 30 pips is something I'll take every day. And shifting those probabilities into our favor with the ASFX parameters builds so much confidence in your ability to execute on these trades. So once again, guys, I know this was a long video. For anyone that stayed through, I appreciate it. Thank you so much. I'll put the link in the description below. Go check it out. Play around with the spreadsheet, modify it how you want. And for the people in the ASFX community, I'll definitely give you guys the link to go out and test our parameters. So once again, thank you guys. If you're not subscribed, please hit the subscribe button below. If you liked the video and got some value out of it, please hit the thumbs up and also hit that bell icon below so you get notified for any future content I release. Once again, thank you, and I'll see you in the next YouTube video.